Happy Friday, everybody. It's February 5th. Alan, Veronica,
Hi,
I'm Chris
everyone.
Davies. This is ABC Advisory. We're going to do our Friday investment talk. The markets have been quite bullish this week. I'll just start off with a little bit of a wrap of February and look at this calendar. We expected the first day to be bullish after last week's sell-off, but it's carried on here. We've had really incredible move in the market, reaching new highs yesterday and continuing on that today. Next week looks to be bullish, actually, but it's the second half of February that we're a little bit apprehensive about. And I think that's really, if people are taking advantage of this bullishness, they should be wrapping it up as soon as possible next week. So, Alan, did you have a couple things you wanted to mention? I think you had some stocks you wanted to go over that we had picked out on our channel.
We can go over the stocks right now. I mean, these are 2 or 3 stocks that I think regular viewers will be aware of. We've got an old favorite, SC Group, SCA, which is the Southeast Asian version of Amazon. They also do payment systems. They're recently developing a banking license in Indonesia, for example. And that's just seen a huge spike over the last, I don't know what's that, Chris, 5 trading sessions from the bottom there.
Yeah, they suffered during that dip, that last week, and then it's just ripped higher. It's actually breaking out today of this little consolidation. It's up 5% again today. Really, this stock, you wonder when it's going to go down. I mean, this is just such a great business and just keeps going up. So
exactly,
that's a good
buy. This is one for buy on the dips, basically, and we've had a few people very interested in it. Melly is another favorite of yours. Touched over 2,000 quite recently. It's back down below that now, but I don't think it's going to be like that for long. So any kind of dip, again, last 5 days or something like that, 10 trading sessions ago was a good time, good entry point there. But again, these are still going up, and they're in growing markets. These markets are huge potential over the next few years, and they're going to grow.
And PAGS is another one with this payment system for Milo.
The other one we looked at, which you have a particular interest in, is FLGT, which is just flown, if you pardon the pun.
I almost have to apologize if people got out of this early. It's just incredible now. I mean, I was one of the people that got out of this early, and this was a stock we should have held a long time. This just went parabolic here, and
it's up 15% today, and that's another, I don't know, 30% this week or something stupid. Why is it performing? Do we have any news? I mean,
testing rates are going up in the States, and all the hospitals and everything contract with this company to use their tests. The other stock that just got it's kind of interesting. I'll just bring this up as a side note. This TTOO. It's a tiny little company, but this is a stock I've held for way too long. But this is up 28% today, just on the news that actually its testing kit works against the Brazilian strain of the. This is a $3 stock. This is an easily acquirable company for a big pharmaceutical. So at some point, and they have all different types of tests, and they're one of the leaders in the diagnostics field. So I have a feeling that this is going to lead to some acquisitions, just because coronavirus, maybe on its back leg here. That doesn't mean we don't get another version of it next year, or we've had so many viruses come out of China. These SARS viruses come out of China that, I mean, I think we're just preparing ourselves for the future. And a lot of these companies could be acquisition targets for that. Let's go back to your list though, Alan. I just wanted to bring up a side.
No, that was interesting. The only other one that's interesting, this is Super Bowl week for those of us who are interested, of which I am, but sadly my team's participation ended last week. So, but DraftKings.
Yeah, DraftKings.
And it's an interesting angle from ARK and our the guru, Kathy Wood.
Yeah, we saw this pattern where it just couldn't break out above this resistance levels here around 55, and then just shot higher this week as it did, and it's up 17% in the last 3 or 4 days. And as the market was rolling over, we saw this not going down, and basically highlighted this as a stock that could potentially really go up with the Super Bowl coming out, and
generally sports starting to open again. I still think this is early days for this.
College sports are really key, and it really got hammered here when the college season didn't open up. So now it's really taken off. You look at these from this low here, it's up 50% about. So an interesting story stock. I think this is a lot higher to rise. It's almost like the second only to marijuana stocks in terms of like the kind of hype and story around these things about the deregulation in America.
Can we look at TRIT? I'm really interested in that stock because it's a fintech in commodity trading based on blockchain, and there is a huge short interest in it, above average, about 22%. We talked about this company quite a lot. Great fundamentals, but it's really got beat up.
Yeah, we liked it back here, and unfortunately, like 2 days after we talked about it, there was a short seller that came out.
But it's interesting that even on Reddit, there are tons of investors on Reddit trying to retail invest.
Yeah, it definitely seems to have a solid bottom. It seems like this is a safe place to buy it at $6 or $7 a share down here. And really get involved, because even if it goes back to 11 or 12, you're talking about a double, and that can just happen because of a short squeeze or because it actually proves that these short sellers and this report that came out is just basically unfounded. So I think that this is an interesting stock, kind of more speculative stuff. We've touched a lot of this speculative stuff, but
it also shows, Chris, that you're human after all. That not everything you touch turns to gold.
Yeah, and we talked about this. This was one of ours on our blog, and we mentioned it, and it just hasn't gone anywhere really yet. But I think there's a lot of potential.
Remind us what this is, Chris.
Yeah, Outset Medical.
So it's medical diagnostics.
There's a lot of medical stocks we put on our trade.
That's one of your favorite areas, right? So.
Yeah, and then we talked about this one, which just exploded since we put it up. It was at 15 and it went to 26 or something. So this is again a medical stock. A couple that we talk about long term would be Tandem Diabetes, and we still love this. We love where this is just consolidating here, really developing a great base here. And the other one that we like is this TeleDoc, which is telemedicine, and it's just rocketed since again it had this nice base where it just kept going here for a long time flat, and then recently it just exploded up 40%. So the same thing can happen in Tandem Diabetes. A lot of it's going to be earnings driven and see how well they do. And then we mentioned again, this was a dentistry stock that posted great earnings, and after earnings it was up 12% or 13%. So the key about some of this medical stuff is if we can get people back in for procedures that you can actually pay for and have a doctor look at you or a dentist look at you, when the things open up, these are going to really take off. And I think that's what everybody was really reticent and kind of apprehensive about. So I was just going to touch on the big stocks this week a little bit, because after Microsoft came out with its results, the stock shot up. It didn't look like it was going to go anywhere, but then it really did follow through, and we're at 245, which was kind of our price target for the middle of February. And here we are in the middle of February at 245, and I don't see much more upside on this, and this is a good time to get out of that. I know we have some people that actually work at Microsoft and are heavily vested in this just because of the stock compensation that they get. Another stock the big ones are Amazon. Didn't really go anywhere. Amazing earnings again. Alan, we covered Amazon before, remember? Yeah. And again, it grew at 40% EPS growth and not rewarded. Not rewarded. For it went from $10 a share to $14 a share earnings, and it's a blip. And so there is some feeling in this market that, look, we've reached the point where just things are expensive, and people recognize Amazon's expensive. Even if it's growing at these levels, it's expensive. And Google earnings had a big blowout. I think it was up 20% or something earnings, and they said revenue on advertising in YouTube is coming back. So this did go up, but it's getting way up into the overbought levels again. And I'm mentioning the big name stocks because this is what the ETFs, the SPY and the
triple Qs
and the triple Qs, these are what they're allocated to. So you have to be conscientious of. You may say, well, I don't own Google. Well, probably you do own Google. I mean, probably you do own Microsoft. Probably you do own Netflix. So
I know Veronica wanted to talk about commodities, but maybe it makes sense to go on to our core strategy a little bit, because you brought up that just right now. You mentioned with NASDAQ in particular, the weighting that you have with these big stocks. One of the things that is possible that we would move to in the core strategy soon is the equal weighted part of the NASDAQ.
Right, and so I'll just bring this up here quickly and just show that if you look at the universe of ETFs that this thing can invest in, right now JKH is ranked 4th, and it's in the portfolio as the holding, However, there are better rated ETFs, and one of those is the equal weighted NASDAQ, and the other one is emerging markets, which we again have discussed in I think December even, that we saw emerging markets come back and really show their relative strength versus some other things. So yeah, we might be seeing some changes in that next month, and we'll be on the lookout for that. But emerging markets is a good segue into commodities, Ron, because this is what like Brazil, and I look at this chart today. This is the big one is Peru. I mean, look at Peru is copper, Peru is gold, and look at this thing, just boom. It's up 4%. The ETF for the country is up 4% today. So you know, EWZ is up today.
I think a lot of that is oil, as you were going to highlight.
Oil, and
oil, agriculture, everything.
Yeah, so there's oil's been up on a rip for the last 5 days. Everybody's expecting a stimulus package, a huge stimulus package that puts pressure on the U.S. dollar. And the U.S. dollar, instead of buying like gold, people are actually buying oil because they expect the stimulus package to actually increase travel and
stimulate
general economic, stimulate and increase the PMIs, and that's going to be good for business. So we mentioned that the effects of inflation on some of these trades before. Is there something specific you wanted to look at?
I just want to mention, like, besides all the reasons that we pointed out before, you can see here that the commodities market's been a bear market for the last 10 years. And that's one of the distressed assets that a lot of asset management companies are looking into. And according to Goldman Sachs, the recovery in commodity prices will actually be the beginning of a much longer structural bull market. So, but in commodities, there is no necessarily a benchmark like S&P 500. So to play a rally in commodities, investors can hold funds that hold the physical commodities or their futures contracts, or they can hold the stocks of the producing companies. And I just want to show you the list of funds and some stocks in energy, metals, and agriculture to consider according to Barron's. Here's DBA agriculture, DBC, the regular commodities, and they were all underperforming big time. And this is like silver and gold and oil, all these ETFs. It's to consider if you want to get on board.
Mm-hmm. Actually, I'm going to just make a little comment here, because you got to be really careful investing in the commodity space, because these are based on futures which have this contango, and we saw the problems with U.S. oil this summer when prices fell and they went to negative levels. And even look at this 1 year return on this, even though oil is back up, the return on this is awful, because it's actually involved in the futures market and not in the oil itself. And so we really have to be careful when you're buying some of these ETFs, you know what you're actually holding. And, you know, we talk a lot about just like getting involved in certain companies, right? Or certain countries. So if you're going to take an oil play, get involved in BP or Shell or Chevron or some of these MLPs is maybe a better play than something kind of broad ETF that invests in the commodities and the futures specifically. Mm-hmm. So that was just a side note. And
I was going to also mention, the risk with commodity funds that they use and track futures. So forward prices can be higher than spot prices, and that kind of penalizes them when they roll forward their holdings.
That's exactly the contango that we talk about. Yeah, that's when something you got to sell your current expiring contract and buy something that's more expensive. You're constantly losing money every month. So,
and that's why, you know, we've done this in the past. You play oil on Brazil and Russia, basically. I mean, these are good ways to play it. And if you wanted to take a real aggression, both Brazil and Russia are available in triple leveraged ETFs or double leveraged ETFs for Russia. But triple for Brazil, BRZU. The problem with commodities vis-a-vis holding stocks and shares or even country ETFs is very similar to an argument that we made, or a discussion that we had maybe 6 months ago was about dividend producing shares. Where people are focused only on, oh, it's dividend producing, it's dividend producing. I need dividends coming in. Dividends producing stocks over the last 10 years sucked. They underperformed the market. Mostly they underperformed the market hugely. And you're actually better on focusing on returns of good companies rather than, you know, an ExxonMobil, which would pay 4% and has lost money over like 15, 10, 15 years or something.
Okay, so we talked a lot about stocks today. I actually like this kind of format when we talk a lot about stocks a little bit, because we, you know, break it up a bit, because sometimes it's more presentations and more kind of conceptual stuff, but this is where people make money, and this is where we can see the market and what's going on. So thank you very much, guys. We'll talk next week. We'll probably have some more guests come in March, and have a good week, guys, and thank you for watching.